All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about an hour, and we had a really interesting reaction range overnight. Market got bought up into the close yesterday, just slightly. You can see the market right now; it's pretty much sitting where it was last time I was on video. So's Pepsi. But if you look at the reaction high, reaction low overnight, about a 20-point range, which is one of the larger overnight ranges that we have seen. Now, it was kind of all same direct. It was both directions about equally, so about 10 points higher, 10 points lower. And you can see this happen during the European Open. And then, really quickly bought up and, kind of just, fading a little bit. We had the market down about 5 points as it sits right now. So nothing too dramatic, but, keep an eye on these reaction high, reaction lows. If one of these breaks here today, we're likely to see some algorithms really kind of pile in here to them. There's no sign that they're going to break, as they sit right now, and just one of those technical levels that's interesting. Now for the challenge, Pepsi rallied about 20 cents into the close. It's down 30 cents this morning. Nothing major going on there yet. Here with Pepsi, I'll show you what it looks like on stock charts here. Just kind of that, little mini inside day near the top end of yesterday's range. And, not uncommon after days like yesterday. It's one of those things that, probably more common than not, though, it's one of those things that really doesn't have a lot of technical significance, technical meaning. After you have a day like this, let's just say it ends here, which I know, long way to go, but after a day like today, typically breaks the high from the prior day. It's a big, big buy, and if it breaks the low from this inside, then it's a sell. And I do expect that to kind of be the case here with Pepsi, but we'll see how that goes. I'm still expecting some very nice upside follow through after what we saw yesterday here with the stock and with the signal. All right. Now, this morning's headlines are dominated by bank earnings. We have seen the earnings here this morning for Wells Fargo, for JP Morgan, and for Citigroup. Now, you can see Citigroup reaction to the upside, JP Morgan reaction to the upside, and Wells Fargo reaction to the downside. If you followed these three on earnings over the last few years, it feels like this is what it's always is. Earnings happen, JP Morgan, Citigroup go up, Wells Fargo goes down. And again, that's not the case each and every earnings season, but man, it's just felt like that's the typical case here. So let's go take a look at the one that matters the most, and that is JP Morgan. For whatever we want to kind of talk about the financials, market doesn't really look to Wells Fargo as a, hey, what's going to happen with the markets? What's going to happen with the economy? It looks at J.P. Morgan and says, hey, Jamie Dimon, what are you thinking? Right? There's a much, much stronger reputation there. And so JP Morgan's earnings are what matter. And, you can see that with JP Morgan, up today, talking about some of the consumer strength. We've seen a little bit of rotation into some of the consumer names that have been weak here for about the last week. But beautiful action here in JP Morgan. We do, for the challenge, have a 3-7 crossover happening on JP Morgan. Also on Bank of America. These are the two banks on the challenge watch list. So Bank of America with earnings upcoming, but JP Morgan earnings here today. We'll see where it sits this afternoon. The biggest risk to JP Morgan not being a signal is it's moved to more than two average true ranges in the last 24 hours. And so that won't be those aren't signals, but when we see that happen on earnings, we tend to see the stock go higher. We saw that here in October. with JP Morgan. And so the question comes is, all right, JP Morgan's had a beautiful run. This is a stock we've talked about at length over the years. All through this little consolidation here, it's finally had its breakout last year at the end of the year. It's been running. Is it too far? Can it go any higher? What's more likely to happen right here, right now? Well, let's just take a look at a few of the numbers, right? Here's the earnings beat on revenue. We can see the revenue beat expectations by a large margin, something that JP Morgan has done over the last 4 quarters to a strong degree. The earnings, another strong earnings beat. And you can see fourth quarter, 30%. That's 30% earnings growth. That's a monster number. That's a monster number here. Now, JP Morgan doesn't give guidance the way some companies do. So, we'll see how some of these other numbers fill in going forward. But monster beat here for JP Morgan. So, do they have further room to the upside to go? Are they, maybe it's been a great story and it's time to, time to wear off, time to, see it go the other way? Which way is it? Well, let's go look at the fundamentals here, right? And there are a few fundamentals I want to take a look at with you here on JP Morgan. And I have a 10-year chart here of the stock, and we can see that it was $30 back here in 2012. It's now $140. It's been a monster run here for JP Morgan, and well-deserved. Now, I have 5 different categories here of financial metrics, right? There are thousands of financial metric categories that we could use. These are the 5 I'm going to look at because when it comes to the banks, to me, these are the 5 that right here, right now matter. When it comes to the banks, price to book value has always mattered, right? And price to book value right now is 1.86. This is the highest price to book value that it has had in a very long time, really since the financial crisis. These banks, for so many years after the financial crisis, were stuck around a book value of 1. What did that mean? That meant that if they liquidated, in theory, if they liquidated all their assets and, just paid off the shareholders, they basically, shareholders get what they, what they put in. And that's a very low number. We don't see stocks trade at book values of 1. In fact, if you want a little bit of comparison, we can put in Apple here. Let's see. Let's get the right Apple. There we go. And we can look at the book value here on Apple. And the book value on Apple is 15. The price to book is 15, right? Even when Apple was trading at its lower price to book levels, it was 3, 4, 5 times book, right? And so, you compare JP Morgan at 1.8. 1.8 is very low. But if you look at JP Morgan relative to the last 10 years, 1.8 is very high. If we go back, kind of take a max range here, we can see that here through 1999, 2000, even up till 2007, we saw JP Morgan trade at these price to book ranges. So it's nothing that's too absurd, but it is one of its higher levels. Now, what about its price to sales, right? Well, if we take a look price to sales, it's at one of its historically high price to sales. Means the price of the stock per dollar generated in revenue is 4. One of the highest numbers we've seen. Now, that's not necessarily bearish. We saw 4 come in back in 2018 when the stock was trading at 100, right? So, now the stock's at 140. It's up 40% since then, right? It's not something that we can look at and say, well, it has to go down because it's at these levels, but that is a very high level. So, price to book value rising, price to sales at a high level, stock can still go up, and it can still go up by a lot, but we better have some things going for it, right? There better be some real positives here with the story, with what's going on with JP Morgan. So what are those positives? Well, let's go where we always go, revenue. Now, what's going on with the revenue? Well, take a look at the revenue growth here for JP Morgan. In 2017, 2018, 2019, they're not a tech revenue growth giant type thing, but their revenue growth has been solid and continues to be very strong. Jamie Dimon in his conference call this morning said very constructive on the outlook for 2020. And what's the market going to take that as is, well, revenue growth is going to continue, right? Now, we did see the market kind of hiccup a little bit when JP Morgan talked about spending some money acquiring other companies. We haven't seen that in the banks for a long time. We had the banks back in 2008 and 2009, forced to merge with others, right, and take some of the bad assets and, bad debts and everything else. And some of those were pretty shady, but it was one of those things that happened. And since then, we haven't seen the banks really buy other companies. JP Morgan talking about doing that. That's a big positive, right? That's a very big positive. And the revenue growth element, a very big positive here for JP Morgan. What about the dividend, right? Well, the dividend yield is at 2.42%. Okay. That's about where it's been over the last 10 years. We're not talking about a massive yield, but we're not talking about a dirt cheap yield either. It's not down in this below 2% range. They've been able to hike their dividend as, they've gotten approval from the Fed. So in a solid spot, nothing too attractive, nothing too negative. But then take a look at stock buybacks, because we asked, who's the biggest buyer of the banks? If we want to make an argument that JP Morgan's going to go to 200 or 220, what does that argument lie around? We can't make it based on price to sales. Price to book, we can make a decent argument there. But this is the best argument for the bulls. Who's buying JP Morgan? Well, JP Morgan's buying JP Morgan. And they continue to buy JP Morgan. They continue to buy a lot of JP Morgan. And if things hold up economically and the next Fed stress test comes, what's JP Morgan going to do? They're going to put more money into buying JP Morgan. And so you have a very big buyer in play with JP Morgan, with some of the other banks as well, Bank of America, Citigroup, to varying degrees. But you have a big buyer in play, and that is, JP Morgan, and no signs of that slowing down. Now, there's an argument that's often made, well, if they're the biggest buyer, then blah, 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 it's got to go down. Historically, that's just simply not true. JP Morgan's been the biggest buyer over the last 2 years. Stock hasn't gone down. Yes, it consolidated for a while. Yeah, it had some bad weeks and months and all of that. But the overall fundamentals remain solid. The biggest upside catalyst remains in play. And while, yes, price to sales is a little stretch, price to book is, I think you can make different arguments with that. There is still significant upside that can be had here with JP Morgan. And $220 a share 2 years from now, that's not a difficult argument to make based on the fundamentals here for JP Morgan. My biggest concern when it comes to the banks in general is the numbers are great. They're fantastic numbers. But what about the comparables going forward? Right? Here we are with 30% earnings per share growth. Next quarter projected 0%. Quarter after that, 2%, 2%, minus 3%. The numbers have been so good for the banks over the last year that their comparables are going to get very tough. Meaning, yeah, they're going to have great numbers, but they're not going to look as good relative to what they are now, or how they look compared to last year or 2 years ago. And we've talked about this several times with different companies like Starbucks. Comparables are going to look really good this year. JP Morgan's comparables look really good this quarter, but one of the concerns I have when it comes to the banks is that the comparables are not going to look as good going forward as what they have been. They've had some easier comparable numbers here, and while, yes, they can still beat them and everything else, if there is a little economic downtick, the comparables are going to fall off, right? Just take a look here, projected next quarter, minus 3%. In terms of revenue, compare that to the year-over-year growth that it's had over the last 6-8 quarters. Minus 3, minus 3, minus 4, minus 5. Now these will get updated a little bit, but is it going to be 9%? Is it going to be 8%? No, they're going to have a tougher time hitting those comparable numbers. And one of the things that the company can do is what? They can, buy back shares. And yeah, while the raw comparables won't look as good, the comparables per share will look, just fine. So, the bullish argument, big buyer, JP Morgan, still very solid revenue growth. The bearish argument is, hey, we're now going to hit a period where the comparables just aren't going to look as good. And I do think that should the market have a correction in it over the course of the next several months, I do think we will see a sizable haircut in the banks. I think the banks will hold off. They'll say, look, we're seeing a correction happen. Let's hold off on buying back our shares. Let's let things dip, and we'll pick them up for cheaper. So I think the banks themselves will step back from buying, and you will see a lot of, just sell pressure, take them on and exaggerate them a little lower than what they probably should be. So I do think they're susceptible to that. I think there's a risk of that, but in the long run, still a very solid investment, still a very solid buy with JP Morgan. No, I have not gone through Wells Fargo yet. I've not gone through Citigroup yet. I'll go through them here this morning. But did want to share my thoughts on JP Morgan, as I know a few of you are still riding shares in it, and definitely some solid price action here on it this morning. All right, so challenge continues to hold Pepsi. Sorry, I didn't update the price here. Let me go update the price. It looks like we've seen Pepsi go green a little bit. Let's see. So price here, $2.13. So nothing really to write home about there. $2.13. There we go. But anyway, off and running here with Pepsi, and we'll see what the next signals bring. Thanks for hopping on. Have yourselves a fantastic day. We'll talk to you later. Take care.